For insight into all of this data, we're joined by Brendon Bernard. He's senior economist with the Indeed.com hiring lab. And Gavin Graham, our featured guest, will participate in this conversation. Brendon, thank you, first of all, for joining us. What's your take on these numbers?
Well, it's good to see that after a really weak March report, we get a nice bounce back today. I wouldn't take the number like too literally in the sense that all of a sudden the job market is growing gangbusters. It's more so we take it, kind of think about the average over the past few, and this puts us back in line with that earlier trend. We had one really bad report. Well, now we have a really surprising report on the upside. I think the general state of the labor market is kind of still sort of lukewarm. The unemployment rate remained at 6.1%, but good to see that at least we're muddling through.
So what people will ask you all day today, I'll be the first, is what does this mean to the Bank of Canada? I can tell you and viewers that the overnight index swaps market in Canada, which is where bets are placed essentially on what the Bank of Canada is going to do, the odds of a June the 5th rate cut are now less than 50-50. Before these numbers were released, they were about 2/3, a strong majority being expressed for a rate cut on June the 5th. What do you think happens on June the 5th?
Well, that's a really striking reaction right there, and I can't argue with the markets, though. You know, maybe sometimes the initial reaction pulls back a little bit, but we did enter the morning, especially following slower inflation numbers than expected, as well as that really weak March employment number, with just everyone kind of ready for June cuts. And here we go, a stronger than expected employment number, and now we're back into a coin flip territory. I will say, though, one thing that stands out about these numbers, and it's been the case for the past year or so, we've got this 90,000 employment increase. The overall employment rate, that's the share of the population working, was basically flat. So we've been experiencing record population growth the past year or 18 months. And so that pushes up the break-even pace of job growth just for the labor market to maintain stability. Yeah. And we've been lagging that pace of population growth for quite some time. Now this month we probably outpace it maybe slightly or roughly match it, but 90,000 seems like a huge number just because the population is growing so quickly.
Okay. Gavin Graham, any thoughts that you may have on these numbers? And do you have a question to Brendon?
Well, I think it reinforces our discussion before the break about why apartment REITs are probably a good idea, given that growth in population. But I think the most important point, Brendon, which you mentioned, was we had a really weak March number. Now we've got a really strong April number. Would you think that, in essence, one is cancelling the other out, and effectively we are running at that steady state number?
I think so, pretty close. I mean, take the average of the two. We're at 45,000. That's basically what was prevailing in the months leading up to March. So I think overall, I take the two as a wash. Though that unemployment rate above 6%, that is actually a little bit higher than the pre-pandemic level. So it is a sign that we aren't in that same tight labor market that we were in early 2023. But I think also a sign that at least the economy isn't kind of careening to some negative outlook. We're sort of muddling through.
What do you think of the wage growth numbers, Brendon? Wage growth decelerated to 4.8%. It was still stronger than economists had expected. However, what do we make of that number? And what is the feed through to inflation?
Yeah, well, I've kind of been a little skeptical of these LFS wage numbers the past few months. They've been stronger than some of the other readings we've been getting, like from the payroll numbers and the CEF. But still a solid pace in these headline numbers. I kind of suspect that we are seeing some catch up to the surge in inflation earlier times on the wage side. That I think there has been a bit of room for wages to catch up to prices in that regard, and so I don't think that's the number that's driving this the sort of shift in investor expectations on the rate cut. What people are really looking at is just that the overall momentum in job growth, which is definitely we can be a bit more optimistic on after that weak March number.
Brendon.